All right, so we're going to get into our last speaker of today. This man I met at a real estate networking event at Korea, and insurance agent. This was back at the time. I had another conference coming up, and so we spoke, we conversed, and we was able to build some rapport. And I needed someone to speak at my live conference last year, and he accepted it with no issues, no problems, and he shared the information as well. Also, I want to ask you, all of you that's on the page, all right, to subscribe to our Wisdom and Wealth YouTube. It's called Wisdom and Wealth Warriors. All right, Wisdom and Wealth Warriors. Subscribe on YouTube to that channel. So going back to it, he shared the video, which is on the Wisdom and Wealth Warriors. I threw the plug in there for the Wisdom and Wealth Warriors because if you go back on that page, you can see Dontrae Withrow on there presenting about the topic that he's about to speak to you all today in live fashion. All right, so Dontrae Withrow, he is an insurance broker. He has his business is called the Withrow Financial Group. It was founded in 2020 by Dontrae Withrow. Withrow Financial Group prioritizes empowering individuals with the knowledge and security that come from personalized insurance solutions. Their focus is on client education by explaining whole life term and universal life insurance products and annuities. They equip clients to make informed decisions. With a strong family focus, Dontrae is joined by his wife, Sierra, their two daughters, and newborn son. Together, they share a commitment to serving the community. And as he said, he is licensed across the United States. So I want you all, as we dealt with the other speakers before, this is it. This is the last one of the day. Put those hands together. Give a warm Wisdom and Wealth hand clap for Dontrae Withrow.
Thank you. Blessings to everyone. I'm so grateful to be on here again. My good brother, Brother Joseph, like I said, we met on Korea and we just hit it off. And so I am a licensed life insurance broker. The difference between an agent and a broker is most of your agents are what we call captive in the industry, right? So they can only deal with what's in their company. So your companies like State Farm, Allstate, those companies, if they cannot help you in that realm, right, then unfortunately, you're out of luck. For me, I represent 40 different companies, right? So I'm dealing with those who may have a fixed budget. They only can do this much. And then I deal with those who are multimillionaires. God has definitely blessed me to be in rooms that I would have never thought that I would be in, all because of the power of life insurance. So definitely want to talk to you about, I know the sister was talking about finding ways of circumventing being penalized. Life insurance is one of the ways that you can circumvent, those penalties. I have, like Brother Joseph says, I have a newborn. I have a 3-month-old, right? So I set up a index universal life policy, and we'll get into that a little bit. It's a $175,000 policy, right? So I'm taking advantage of two things. I'm taking advantage of compound interest, right? So that's interest over time. And then two, the cost of insurance. When you take out insurance on your children, right, the cost of insurance is low. So for $175,000 policy, now this is just particularly with him, was $19 a month, right? So if I just wanted to keep the policy going, I could just pay that $19, $20 a month. But I want to take advantage of compound interest, and so I put more money in there. So by the time he turns 18, he will have close to $400,000 of tax-free money. this is what other individuals and ethnicities are doing. They are taking policies on their children. By the time their children are turning 18, they're buying condos, um, multifamily apartments. I actually have a client just this week. He bought an apartment complex for his son with his life insurance policy. So these are the things that I'm really passionate about, because of the fact that we in the African American community need to understand that these are the ways. And the brother who spoke last time, he had some nuggets as well, but this is what's not being talked about. The power of life insurance and how you can utilize it to buy real estate, to start your business, to set your children up. You know, Proverbs 13:22 says that a good father sets an inheritance for his children's children's children, right? So you're throwing your money forward. That one of the ways of doing it is putting that into life insurance. So I got a little short presentation that I'd like to do. You guys let me know if you can see my page. Okay. Obviously, you know who I am. So I'm going to be talking about from policy to prosperity, how the index universal life and whole life can build your legacy. Can anyone tell me, just by in the chat, do you know the difference between a whole life term and universal? Okay. All right. So just a quick basis. So think of term insurance as like renting insurance, right? It's for a specific time and it has no cash value, right? So you can have a 5-year term up to 30-year term, right? And it's cheap. The reason why it's so attractive is because it's cheap. So you can get a whole lot of insurance for a little bit of money, right? But the unfortunate part is when after that term is over, you lose all your money, right? So you lost. So let's say if my brother Joseph paid like $30,000 over 30 years, right? He after that term is over, all that money's gone, right? So that's what term is. Whole life, or what we call permanent insurance, is basically for the rest of your life. So if you got it now, as long as you make your payments, it's for life, right? Basically, it accumulates cash value between 3 to 6%, depending on what the insurance company sets that interest rate. Also, depending on what insurance company you go through, you will get a dividend. So not only are you getting the interest on your money, you're also getting a dividend. So that could be $20, that could be $30, that could be $100. I've seen it up to almost $1,800 to $2,000 dividends, right? So now you can take that dividend and say, hey, I want to spend it, but that's taxable income. So what we want to do is we want to put it back into the policy and let it compound. So that's whole life. Now what we have gotten now, what's become popular, is the index universal life policy, which combines the I want to say affordability of the term and the cash value of the whole life, and they've kind of merged together, right? So basically, an index universal life, it started in 1997, right? It was to combat the buy term and invest the difference. If anybody has heard that, buy term and invest the difference. Well, what we were finding out is that a lot of people were not, they were buying term, but they weren't investing, right? So What the IUL does is you have the flexibility. Let's say you're paying $50 a month to maintain the policy, but you have the ability to put more money in there just based on what the guidelines are. So there are guidelines that we have to stay in, but you have the ability to overfund that policy. Not only that, a portion of the money that you're putting in goes into an index. So an index is a group of companies, just like the S&P, the Barclays, just depending on what insurance company you can put into that index, right? So let's say you put it into the S&P 500, and that index does 10%. Well, your money does 10%. So you're gaining on the upside of the market, right? The great thing about these policies is, and I know I'm going ahead, is zero is your hero. So because people are like, well, what if the market crashes? Well, it stays the same. So you're not losing any money, right? So even if the stock market doesn't do anything, your money is still staying the same. So when the next year, let's say it goes up, let's say the 4%, you're going up from here against someone who put their money in the stock market and it was negative 14. So they got to start at negative 14 and go up to 4. They're still negative 10%. So that's just a little background that I wanted to kind of give on the different ones. Okay. Basically, the basis of IUL and whole life, how these policies can create wealth and legacy, and real life examples. I like to give real life examples because sometimes we as financial professionals, we give off these, for some people they think it's non-obtainable. But I want to give you instances where you can actually put your money to use and actually see your money grow. Okay, why legacy planning matters. Protecting your loved ones. If you have children and if you have a wife, right? For me, I lost my sister in 2021, and that really kind of was a sobering moment for me. Like, I want to make sure that when my time is done here, as a man and as a father, I want to make sure my wife and my children are taken care of. I want them to have. I want my children, especially, to have options. So that's why I put my money into life insurance. Also, leaving a lasting impact. Also, you're growing tax efficiently to achieve financial independence. Like I said, a lot of people don't understand that all of your wealth, most of your wealthy people put their money into life insurance, especially during the 80s. Donald Trumps were putting money into life insurance because of the fact that they could dump millions of dollars into it without any regulation, right? Until 1988, then of course the government said, "Hey, we got to put a cap on here." The Rockefellers. How many of y'all have heard about the Rockefellers? Right. So the reason why the Rockefellers are still wealthy to this day, right? The reason why the Rockefellers are still wealthy to this day, they created what they called a family trust in life insurance. So each family member, they created a trust. Each person had to have a life insurance, a whole life. It was a $1 million whole life policy. Each person, when the time they were born, 2 weeks old. A lot of people don't understand that. You can get a policy on your kids. They turn 2 weeks old, 14 days old. They can get a life insurance policy. They would get $1 million policy, right? By the time they turned 18 or whatever, they had enough cash value in there where they started businesses. So each person did not benefit from the policy. The trust did. So if someone passed away, that $1 million death benefit went into the trust. So that trust kept going into generation. So compound interest, right, was every 7 years that $1 million was doubling. So that's one of the things that we're not taught. So, okay, and I already talked about the difference between whole life term and IUL. Okay, I also talked about this too. I kind of go ahead. So, all right. So, wealth accumulation over time, tax advantages, ability to pass tax wealth tax deferred, and the uses of cash value for loans, retirement, and emergencies. So going with the whole life and term, I would say the IUL, the Index Universal Life, you can utilize that for retirement. How can you do that, right? So instead, I know the brother talked about the 401k, but the only problem with the 401k is, if you have an emergency, you can't pull from that money without getting penalized, right? So you could use the IUL as a alternate or to add an addition to retirement. You're getting the upside of the market, and it also with the IUL, it does not affect your Social Security. A lot of people don't know that, and when I say that is that when your 401k, when you get ready to retire, you have to pull out a certain amount of money, right? And also because this tax deferred, you have to pay money on that large lump sum of money, right? But with the IUL, you've already paid taxes on that money. So by the time you're ready to retire, right, it's truly tax-free money, and you can withdraw as much as you want tax-free. So that's one of the benefits of doing the IUL. Also, with the whole life portion, right, you can utilize that as a savings account, right? You're not going to get as much of a interest on that money, but you're still getting something. You're getting 3, 4. Right now, it's at 6%, where people are getting money interest on their money. So you can utilize that as another savings account for emergencies that you can get access to. Also, too, going with the whole life, my real estate investors love the whole life portion, right? Because they come to me because when you put your money in the bank, how much interest do you think you get when you put your money in the bank? Maybe what, 0?
You don't know way better.
But but a 0.5%, 0.5%, and so what my real estate investors love, or the problem that they were having.
I would think a real estate investor would want to do an IUL, not a whole life policy.
You have to mute your phone out. Thank you.
What the problem that they have with putting their money in the bank is when they have these large sums of money, and it's taking them weeks or almost months to pull that money out, right? So when you put your money into a whole life policy, right? Let's say you had $100,000 that you put into the whole life, right? The insurance company will give you $100,000 of their money and hold your money as collateral while your money is still growing at 4 or 6%. So you have that liquidity, that easy access of money, usually between 30 to 90 days. After you've put the money in, you have that money. So you have an emergency, you have a real estate that you want to purchase, they're going to write you a check within 3 days. You get your money within 3 days. So So those are the kind of things that you can do with those type of policies. Also, you can leave a charitable legacy. There's one of the companies that I work with. They will do a 1% match. So if Brother Joseph wanted to leave $1 million to his church or what to wherever as a nonprofit, the company will match 1% of that, and it goes to your nonprofit, your church, your organization, whatever you want to do. So these are also the things that you can also do with these policies. Okay, some common misconceptions, some 5 myths about life insurance. One of them is life insurance is expensive. You don't need coverage if you're young and healthy. Insurance companies don't pay if you have health issues. If you need it you don't need it when you're single and without dependents. I feel like that's when you should get it, is when you're single. Also when you during life changes, that's why it's good to have a good agent that keeps up with you during life's changes and things like that. Whether you're getting married, having a baby, changing jobs, things like that, you definitely want to talk to your agent with that. Also, having employer provided insurance is enough, right? Most of us, by the raise of hands, have, if you're working a W-2 job, your job, offers life insurance, but that is a group term policy, right? Meaning, in some instances, the reason why it's so cheap, I think mine is like $6 a pay period, right? It's a group term policy. So when you leave, let's say I decided to leave my job, I can't carry that insurance with me, or if I can carry the insurance with me, it's going to be astronomically high, right? And I don't own the insurance, right? So I would take the company insurance. Don't get me wrong. I'm not saying don't take it, but I would also have my own personal one. That way I control it. I know what it's doing. This, that, and the third. Okay. And that's basically it. I didn't want to get too deep, but I know there was going to be questions, so I just wanted to open the floor for questions or anything like that. So